Highly anticipated July Monetary Policy Committee meeting of the CBN, I said earlier, scheduled for today and tomorrow. That's 22nd and 23rd. And it's starting amidst a backdrop of significant economic reforms. As the MPC convenes, the spotlight will be on decisions regarding key interest rates, reserve requirements, and other monetary policy tools. Analysts and market participants will be closely watching for any signals or a shift in CBN's stance, particularly in the light of government's recent efforts to stimulate economic growth through increased spending and policy reforms. Now, let's get talking this Monday afternoon, and I'm starting the week on the show with the Director of Research and Strategy. He's with Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Good afternoon. It's good to have you start the week with us on Business Nigeria, Mr. Taj.
Good afternoon. Thank you so much for having me on the show today.
Yes, I think I'd like to start with a regular question you will expect from me. What do you think would happen at this very meeting? That question seems to be a very big one, but considering the fact that analysts are saying monetary tools have kind of been overstretched, do you agree to that sentiment? And what do you think would be the focus at that meeting as they gather today and tomorrow?
I think what is very important at the meeting of today and tomorrow is consistency. Consistency is very important around the action that the CBN takes, on monetary policy. So on the back of that, I recognize that there will always be three options on the table, either for the Monetary Policy Authority to lower interest rates, or for them to keep interest rates unchanged, or for them to hike interest rates further. So they will be thinking around these three areas, and the balance of risk is where the focus will be. And I reckon that in the current environment, we have started to see inflationary pressure becoming more intense, particularly on a monthly basis. If you take a look at June inflation, for instance, you will see that the disinflation that we had experienced over the past consecutive 3 months was truncated in June. And what that implies is that it will form, another concern for the CBN. So considering to hold interest rates unchanged will not be the optimal decision in my view. I think, what will be the optimal decision for the monetary authority is to raise interest rates further, considering the, rising inflationary pressure, particularly the month-on-month inflation that we saw for the month of June. So I expect them to hike interest rates by about 50 to 75 basis points, which I consider a mild increase, which is what we can possibly live with, just to be consistent around our policy and around the fight of the CBN against inflation. I think that is the expectation, I reckon Nigerians, should look forward to. If they decide to hold interest rates unchanged, it will imply that the Monetary Policy Authority is not consistent, because we continue to see higher inflation and you are not, addressing it via, slightly higher interest rates. If they decide to cut, it will roll back all the gains that we have seen so far within the past, few months, 6 months, 12 months, thereabouts. It will roll back all those gains that we have witnessed. So, to my mind, I think the best is for them to raise interest rates, but mildly and not aggressively, in my view.
Consistency is the word you've used, which I also agree with you that is key. But considering our economy, the shape of Nigeria's economy, the challenges we face as a nation at this time, interest rates, and even the Africa's richest man came out to say no one can run businesses above 30%. Do you not also think that many analysts or economists like you saying that we need to let the fiscal policies or fiscal measures instituted by government start to play out also to complement this instead of just increasing those rates?
So I absolutely agree that the fiscal authority, has a role to play in this regard. And that, to my mind, is the reason that, they have been looking for income from, all the possible sort of, channels. Income also, also considering, debt from all the possible channels. So definitely, no doubt, the fiscal authority has a role to play. But one thing that we have to bear in mind is that there will always be time lag in terms of fiscal authority policy, to begin to have an impact, and for the impact to reflect on the overall economy, particularly when it has to do with building the structure for a much stronger economy, building the foundation for a much stronger economy. So you will not see the results immediately. The results will reflect over time. It is unlike monetary policy, where when you hike interest rates, the market will respond accordingly, the financial institutions will respond accordingly, and if you move inflation downwards as well, they will also, all these elements will also adjust almost immediately. That is unlike, the fiscal authority sort of policy, particularly when it has to do with you building what seems to have collapsed or what seems to have been badly damaged. So no doubt, the fiscal authority has a role to play here, starting from security around, regions where we grow food items, to ensure that those food items, are sold in the market at not too elevated prices. Also, our efforts around importation of food items in the short term, not in the long term. In the short term, the fiscal authority should consider, an increase in importation of food items to ensure that we are able to fill that gap around demand and supply. Because if we look at us currently, we have a situation where food demand is much higher than food supply in the local economy. And the only way you can quickly fix that in the short term is for you to consider importation. This is where I sort of credit decisions around lifting some importation, some tariffs or duties that are paid on some food items when they are imported over the next 6 months or thereabout, just to ensure that food prices at least are stable, if they cannot really come down materially. But I reckon that over time, when the impact of the food importation at zero duty begins to reflect on the economy, within the next sort of 3 to 6 months, we will possibly be seeing much more stability in food prices. What can also help is the activities of the farmers, in terms of harvest. When we are into the harvest season, for instance, I would expect food prices to also broadly be stable. So I think it is all those directions that we can look at, and to form what I will call a cautiously positive outlook, in my view.
I think you hit the nail by the head. Talking about harvest season, many expect that we should start to see rice and some other food stuff coming up, and maybe that will help address some of those challenges. But let me also ask you that equity market players are also waiting for the outcome of this meeting, because we've seen a very beautiful performance of the market in recent times. How do you see these rates issues also affecting equities trading, and of course, even in the FX and other markets?
So if we take a look at the equities market, one key element around the market is that market has performed exceptionally well on a year-to-date basis in 2023. 24, and it is largely reflective of, strategic tradings by strategic investors. So we expect, that to be in place. And if not for the current recapitalization exercise going on in the banking sector, there are higher chances that, the market will have returned well above, 40% year to date. As we speak, the return is, above 30% on a year-to-date basis. And if we capture interest rate hikes, it is negative, for the stock market. Nevertheless, I reckon that investors are looking beyond the current environment. Nigeria, particularly when we're talking about the consumer companies, Nigeria is a country that has a huge, need and demand for food. So we have to eat. So those in the consumer, sector are the stocks for consideration, and that I believe, is where some investors can get some long-term gain. Let's take a look at the telecommunication sector as well. We also have a situation where we continue to utilize, data, and the demand for data has been rising steadily in the past, sort of 3 to 5 years, with also a compelling outlook. So all the equity investments around that sector, for instance, are positive in terms of, the outlook. But when you look at currency is one major element, that I recognize as, performed, much better, talking about the US dollars against the naira in this case. So if you had invested in any, dollar-based fund or investment at the end of last year, by now, you are in big money in naira terms. So those are the areas, I see and I expect around the impact of, monetary policy, direction. But when you talk about fixed income instruments, much higher interest rate environment implies much lower bond prices, and on a mark-to-market basis, that is not too good for investors in the market. So equities are strong as we speak, but the outlook over the next, few months before we end this year will be determined by the success of the recapitalization exercise in the banking sector, in my view.
Now, back to the inflation expectations, talking about inflation as we move on in the year. There have been projections that we might begin to see a decline moving forward. But I'd like to ask you, just last week, the president and the Nigerian Labour Congress, of course, and the Trade Union Congress agreed on 70,000 naira for minimum wage after a long while of back and forth on these issues and series of meetings. That's been settled. We still have the price of PMS hovering around 600, depending on where you're buying it. In some cases, it's above that. Diesel, electricity, and all of that also remain on the high side. Now, my question really to you would be, what will be the impact of all of these moves on inflation as we also try to rein in on inflation?
So I reckon that the impact of the minimum wage increase, for instance, to 70,000 naira from 30,000 naira, I reckon that the impact is already priced in the economy. So I am not expecting any, sort of renewed pressure on the back of that. So the question to ask is, are we going to have, a bag of rice because minimum wage has gone to 70,000? Are we going to have a bag of rice now move from around 70,000, 80,000 naira to around 160,000, 150,000 naira? I think that is not going to happen. Also, other food items, I expect their prices to be broadly stable. If the government is not doing anything at all, in terms of, for instance, so ensuring that they remove or they suspend the duty on imported food items and also, medicines, for instance, one may be talking about much higher prices when all these elements are going up. But we have a situation where the government is also, taking an action to ensure that prices are broadly, stable. The final elements to my mind will be around what happens to the currency. If the exchange rate, for instance, rises and the naira becomes, weaker, one can be thinking about, much higher, inflation. But as we speak, the inflation that we saw in the month of June, to my mind, is reflective of seasonality. If you take a look at inflation number on a monthly basis, since 2020, we have steadily seen monthly inflation rise, on a month-on-month basis. So I think in the month of July, we could see some moderation on the back of, the harvest of some food items, that are transported to the cities at relatively cheaper prices compared to the prices that, pre-harvest season. So I think that is the way most likely this thing will play out. Not so much, is expected around inflationary pressure on the back of the minimum wage increase to 70,000, in my view. There could be some increase, but I reckon that it will not be massive.
Before I let you go, are there other quick wins? Let me make it open for both the fiscal side and the monetary side.
On the monetary side, I reckon that the monetary authority, the CBN in this case, to my mind, should just ensure that it continues to intervene in the official FX market and also at the BDC segment of the market. With that, we should have considerable stability in FX rates. Last week, the CBN was in the market selling about $106 million at the official market, and they disclosed that they will be regular in that market in terms of intervention over the next couple of weeks. At the same time, last week, the CBN was in the market to sell $20,000 to each BDC operators in the market. What that also implies is that the parallel market should also begin to see stability in terms of FX. I reckon that the CBN should ensure that stability continues by supplying more. Interestingly, also, IMTO inflows is also on the rise on the back of CBN's policy. I think they can just continue that momentum. On the fiscal side, I think what is very important is just to tighten, any insecurity that we are currently experiencing it. They should address it. If that is addressed, I reckon that, food prices, to my mind, could, moderate over the short term, and then on a sustainable basis, we begin to see an increase in food output locally, and that should lead to sustained moderation or stability in food prices in the country.
Mr. Tajuddin Ibrahim, I must thank you so much, Director of Research and Strategy, Chapel Hill, Denham. Thank you for joining us on the show. We appreciate it. Have a great and profitable week.
You too.